Hello student, last time we discussed the topic number 2.1, the importance of national income in the lecture number 8. The lecture number 9 we have discussed here the various concepts of national income under the topic 2, national income. So we know that the topic number 2 is about the national income, 2.1 meaning and importance of national income, which is we see in our earlier lecture number 7 and 8. Today we discuss here some concept of national income, the concept like the gross national product GNP, net national product NNP, the gross domestic product means the GDP, per capita income means PCI, the personal income means the PI, and disposable income. These points we discuss now in the today's lecture. So these are the concepts we see the alternative for the national income. The national income means we count as a GNP, national income means a GNI, or national income means the GDP also. So what is the meaning of the national income, which we see and revise just for our study purpose. The national income refers to the total income earned by the normal residents of the nation during the given time as a result of their productive services. Generally, this is the time is the one financial year. So national income refers to the total income earned by the normal residents of the nation during the given time, and it is the given period is one financial year. The primary sector, industry sector and tertiary sector are produced the new goods and services in the economy in every year. We calculate the total amount of new products in all sectors of the economy in given period and added it up. Means the given period of the 1 year, the production of the new goods and services we count in the national income. We can roughly say that it is the national income. These are new products of all sectors in economy in given period of 1 year. We roughly say the national income. So the total income has been found by expressing the value of such income in the money. So here we looking the data of the sector-wise GDP share of in 2018 and 19. In this year, the 15.4% share of the agriculture in GDP, the industrial sector share is the 23%, and service sector share is the more than the 61%, 61.5%. So national income is referred to the total income earned by the normal residents during the 1 year, and the production of the all three sectors, agriculture, industrial, service sectors within the years, so means the national income. About the India, the National Income Committee is found in 1949 under the P.C. Mahalanovish's the chairmanship, and Professor Dhananjay Gandhi, Dr. V.K. Rao is a support member for him. And before that, the National Income Committee 1867 under the Adhav and Nauroji, first time they calculated the national income in India. The National Income Committee in 1948 is also given the appropriate definition of national income. The national income estimates the measure, the volume of commodities and services turned out during a given period counted without the duplication is called the national income. So within the one economic years, all final goods and services counted without the duplication, it's called the national income as per the National Income Committee in India. The Central Statistical Organization CSO, this institute is the collect the data for national income in India, and India's financial year starts from the 1st April to 31st March. And the national income base year is currently is the 2011 for the collection of data. And next is the measurement of national income methods. So national income, the various concepts of the national income, the GNP, NNP, GDP, per capita income, personal income and disposable income. These are the concepts we know in this lecture. There are a number of concepts representing the national income like GNP, NNP, GDP, per capita income, personal income and disposable income. So these are the concepts we looking the here one by one. Gross national product means GNP. So GNP means the total measures of the flow of goods and services at a market value resulting from the current producing during a year in country, including the net income from abroad. So GNP means the measure flow of goods and services at a market value resulting from the current producing during the year in the country and including the net income from the abroad also. It means the gross value of final goods and services produced annually in the country, which is estimated according to price prevailing in the market price, include the cost of production, indirect taxes. It's called the GNP. So all final goods and services produced in year count at a market rate we call gross national product. GNP include the following things. The GNP is equal to C plus I plus G plus X minus M plus R minus P. So C stand for the consumer goods and services, I stand for the gross private domestic investment, G for the government expenditure, X means the export, M means the import. So net export value is included in here. R minus P means the receipt from the property abroad, payment from the abroad. So receipts and payments. So receipts minus payments is included. So GNP means the C plus I plus G plus X minus M plus R minus P. So gross value of all final goods and services produced annually in the country count at market rate we call the GNP. The next is about the GNP at market price. So GNP count two ways, the GNP at market price and GNP at factor cost. So GNP at market price means the multiply the total output produced in 1 year, their price prevailing during the year in the country. It means the gross value of final goods and services produced annually in the country plus net income from the abroad include means GNP at market price. So GNP at market price include C plus I plus G plus X minus M plus R minus P plus the RT minus S means the indirect taxes minus subsidy. So C stand for the consumption, I stand for the investment, G for the government expenditure, X means the export, imports, the net value of export import, receipts minus payment plus indirect taxes minus subsidy. So GNP at market price equal to GDP at market price plus net income from abroad is included in the GNP. So first equation, GNP is equal to C plus I plus G plus X minus M plus R minus P plus IT minus S means subsidy. Next is GNP at market price equal to GDP at market price plus net income from abroad. So GNP at market price is the more than the GNP at factor cost. GNP at market price is the more than the GNP at factor cost. So what is the GNP at factor cost? GNP at factor cost is sum of the money value of income produced by the acquiring the various factors of production in 1 year in the country. So various factors of production, land, labor, capital and entrepreneurs, and these are the factors received income 1 year is counting factor cost. So GNP at factor cost, we deduct the indirect taxes from GNP market price and added the subsidy to the GNP at market price. So GNP at factor cost we include some things, and GNP at factor cost is equal to GNP market price minus indirect taxes plus subsidies is equal to GNP at factor cost. So GNP at factor cost is equal to GNP market price minus indirect taxes plus government subsidies. And next is about the NNP, net national product. So what is the net national product? GNP minus depreciation is equal to net national product, and GNP include the value of total output, consumption, goods and investment in goods, and NNP market price is obtained by deducting the depreciation from GNP at market price. So GNP at market price minus the depreciation is equal to NNP. Whenever we deduct the depreciation from GNP market price, we get the NNP market price. So equation is the NNP is equal to GNP minus depreciation. So what is depreciation? Depreciation is the wear and tear cost and maintenance cost of machinery, building, equipment and assets. So process of production, we use the certain amount of fixed capital, some fixed equipment wear out, it is the component are damaged or destroyed, instead other are the render obsolete through the technological changes. All the process is term called the depreciation or consumption allows. So wear and tear cost and maintenance cost of the building machinery we call the depreciation. So whenever we count the net national product, we minus from the GNP the depreciation and we get the NNP, net national product. So depreciation means the wear and tear cost and maintenance cost of the machinery, which is the deduct from GNP, and then we get the NNP. NNP also we count at the market price and also NNP at factor cost. So net national product at market price is the net value of final goods and services equivalent at the market price in the course of 1 year in the country. If we want to get NNP at market price, we deduct the depreciation from GNP at market price. GNP at market price minus the depreciation, we get the NNP at market price. And what is about the NNP at factor cost? The NNP at factor cost is the net output evaluated at a factor prices. It includes the income earned by the factor of production through the participation in the production process, such as the wages, salary, rent, profit, etc. It is also national income. The NNP at factor cost, national income, means the remunerative part of the all factors, the factors like the land, labor, capital, entrepreneurs, and the respectively their shares like the rent, capital, and the salary or wages and profit. And so some of all these things, means salary, rent, profit, and these means the national income. Net national product, to find out the national income at factor cost, indirect taxes should be deducted from the market price and subsidies should be added. So find out the national income at factor cost, indirect taxes should be deducted from the market price of the product and subsidy should be added to it. To looking this formula, the national income at factor cost means the national income product at the market price minus indirect taxes plus subsidies. So net national product at market price, we deduct the indirect taxes and added the subsidies. So national income means the GNP at market price minus depreciation minus indirect taxes and plus subsidies. So national income at market price is the more than national income product or net national product at factor cost, means the government indirect taxes is the exceed than the subsidies. And when net national product at the market price is less than the net national product at factor cost, means the government subsidies is exceed than the IT. So net national product at the market price, we deduct or minus indirect taxes and added the subsidies. Similar, the second equation for this, the GNP at the market price, we minus the depreciation and the minus indirect taxes from this and plus the subsidies. And our next concept is about the GDP, gross domestic product, taxes. The next concept is about the GDP, we call the gross domestic products, in income generated or earned by the factor of production within in country from its own resources, it's called the domestic income or domestic product. It is the gross value of all final goods and services produced within the domestic territory of country during the period of 1 year. So within the 1 year, the territory boundaries of the country, all goods and services production we call the gross domestic product. The domestic product we include GDP market price is equal to GNP minus net income from abroad. So net income from abroad is not the consider in the GDP because we consider only domestic production of goods and services. We count the net income from abroad in GNP but deduct in from the count at GDP. So GDP means only the goods and services production within the country's boundaries. So GDP is equal to C plus I plus G is equal to X minus M plus indirect taxes minus subsidy. C stand for consumption goods, I stand for the gross investment, G for the government expenditure, RT means the indirect taxes. So whenever we count the GDP, we include the C plus I plus G is equal to X minus M plus indirect taxes minus subsidy. So within the 1 year, the all final goods and services produced within the geographical boundary of country we consider into the GDP. And in general, net income from the abroad not include in domestic income. So in general, we not include the net income from abroad in the domestic income. But in open economy, GDP may include X minus M also. And today most of the economy is the open economy. That's why they include the X minus M. The net income from the exports is included in the GDP. The next concept is about the per capita income. The per capita income is the average income of the people of country in particular year is called the per capita income for the country. The standard of living of the people of country is determined on the basis of the per capita income. The average income or the standard of living is depend upon the per capita income. So this concept per capita income, find out the national income of country divided by the population of the country in year, we get the per capita income. So we find out the per capita income is equal to national income for particular year divided by the population in particular year. For example, per capita income 2019 equal to national income for 2019 divided by total population in 2019, we get the per capita income in 2019. So per capita income is the important concept for economy for deciding the standard of living of the people and the comparison of international level. Next concept is the PI, means the personal income, the sum of the amount of all current income received by the all individual and families in the country in year called the personal income. So one individual person income received from the all sources within the year is called the personal income. The personal income is the never equal to the national income because the farmer include the transfer payment where they are not included in the national income. So personal income is a different concept and national income is a different concept. The personal income we include the transfer payment, but in the national income we not count the transfer payment. The transfer payment means the income when the person is not direct or indirect participate in the production but he get the ready-made income, it's called the transfer payment. The scholarship, the pension, unemployment allowance is called the transfer payment. The transfer payment is included in the personal income but not included into the national income. So personal income is equal to NNP factor cost minus UCP plus CT plus SSC plus TP plus IPD. The full form of this means national income of factor cost is equal to the undistributed corporate profit, means UCP, plus CT means the corporate taxes. So undistributed corporate profit plus corporate taxes plus social security contributions. The social security contribution like the PF amount, the LIC amount, the social security contribution, and plus the transfer payment. The transfer payment when the person is not participate in production line but he ready-made get income like the scholarship, pension, unemployment allowance is the transfer payment, and plus the interest on public debt. The persons they invest some money in the public securities and that time he receives some interest is also is the part of the personal income. So personal income is equal to undistributed corporate profit, corporate taxes plus social security contribution plus transfer payment plus interest on public debt means the is include the personal income. So personal income means the income persons receive within the years from the all sources. The next concept is about the disposable income. What is the disposable income? Disposable income is the actual income which can be spent on consumption by individual and families. The persons receive the income from various sources within the year, which is the personal income. But personal income minus the necessary deduction remaining amount, the balance in the person's hand, it's called the disposable income, which is the available for the dispose and expense purpose for the persons or individual. When the direct taxes are deducted from the personal income, disposable income is the obtained. This income is used by the people for expenses and some of the income saving are also made. The whole of the person's income cannot be spent on the consumption because direct taxes have been paid by individual and families. So person's gross salary is differently and the net salary is differently, because gross salary deduct the direct taxes, remaining income he receive in his hand, and this received income is spent for his consumption, and his received income we call the disposable income. So what is the disposable income? What the personal disposable income is equal to personal income minus personal taxes. So personal income and the personal taxes. So PI means the personal income minus PT means personal taxes. Disposable income can either consume or save. So disposable income is the sum of the consumption and the saving, and this concept of the economy as well as an individual manner. So personal income minus personal taxes is equal to personal disposable income. The gross salary minus the direct taxes, remaining income, received net income of the person which is available for the disposal is called the disposable income. So here what we learn from this lecture, we learn the various concepts like a GNP at the market price, GNP at factor cost, NNP at the market price and factor cost, then GDP, then per capita income, personal income and disposable income. So income of the country within the year, all final goods and services count at market rate we call the GNP, and GNP we include the C plus I plus G plus X minus M plus R minus P. So it is the GNP, the all final goods and services produced in years count at the market rates is the GNP, and when GNP minus depreciation we get the NNP. And what is the GDP? GDP means gross domestic product. Then whenever the one economic years the production of all final goods and services within the geographical area of the country, boundary of the country, production of all goods and services we call the GDP. And the personal income, the income received by the person within the year from the all sources sum is equal to personal income, and personal income minus the personal taxes, the remaining income we call the disposable income. So reference and textbooks for the study, these are the references and textbooks for your study. And important question on this lecture, they explain the various concept of national income, concept of GNP, NNP, GDP, disposable income, personal income, per capita income. It is the various concept of national income. So thank you for watching this video, and the next time we looking the next point, the methods of measuring national income in our next lecture.